Okay, welcome back. 65 points on the Nifty 23,700. Jitendra Gohil is with us, the Chief Investment Officer, listed equities at Bajaj Alts. Jitendra, good to have you with us here. Thanks for joining in. So just sort of give us a sense of what you have been doing, what kind of positions have you been running, overweights, underweights, and I'm assuming you can do long short, right?
No, only long.
Only long. So just tell us overweights and underweights.
Yeah, hi Prashant. So thank you for inviting me on your show. So first of all, how we look at this market, a lot of concerns on the macro front that India's current account deficit is going to widen. So I think these macro challenges will offer actually very good opportunities. And when we look at the entire, the situation globally, it's not only India which is suffering. For example, in US, which is the best performing market, but on the ground, if you see the consumer sentiment in US is all-time low. Even the sentiment is lower than during COVID or financial crisis, but the market is all-time high. Similar situation in South Korea, where the market is pulled up by a couple of stocks. But in India, it's a different story. We think that, look, India is a very, very broad-based market. You have consumption, pharma, IT, and as we see that this war is getting prolonged, we are seeing this kind of concerns are emerging. But on the other hand, we see that there is significant opportunities are emerging in certain sectors where government is trying to nudge the industry to invest. For example, let's say shipbuilding sector, where we think that from a 2 to 3 year perspective or even longer term perspective, is a good theme emerging out of this shipbuilding and ship maintenance sector. Just to give you perspective, the overall incentive that government is planning somewhere around 70,000 crores, while the total top line of all these shipbuilding companies, all top three, is somewhere around, it's actually 4x of all these companies' top lines. So that is one sector I think that is looking extremely attractive to us. Second thing that we look at is the EMS space. Now you have seen that the EMS sector has been doing pretty strong over the past few years and so, and we think that there could also be a buying opportunity because Q1 is going to be a little weak for the sector. Probably the June quarter will see more margin correction, and there you can see certain opportunities might come in. And lastly, we are also looking at let's say UP election and 8th pay commission, some consumption play related to the UP and Bihar side. So I think there are pockets of opportunity where we think there is good opportunity to make alpha in this kind of market.
But Jitendra, at the index level, do you think this year is going to be a washout? Hard to see meaningful returns from here on?
Yeah, Rimasi, like last 2 years we have seen Nifty giving flattish return, Nifty mid-cap almost 8-9% return over the past 2 years. But I think, look, India has been the best performing equity market for several years now, for decades, I would say. Right? Our ROEs are the best in the world, almost 16%, just below US, which is somewhere closer to 18%. Our margins are at all-time high. So, from fundamental perspective, from balance sheet perspective, I think India is doing pretty okay. It's just a patch that I feel that it has come on our way, where market is on the sideline, and probably we will see very, very negligible return this year. We are not very bullish saying that the market will bounce back sharply on an index perspective, but I think one should stay invested, because if you look at next couple of years, I feel all these headwinds that India is facing probably might cool down, and there you see a very sharp recovery happening probably next year or so. So this is the year where we are very, very cautious. We wrote this beginning of the year that this year is going to be a little bit damp squib, and that view is playing out. It's not a very exciting year to be, but slowly, gradually, as this headwind abates, I think market will bounce back sharply.
All right. Hi, Jitendra, and congratulations on the new role, new avatar. Wishing you, your team, all the very best as you take guard in the new organization. That said, I think just to sum what you said is that this year is going to be a year of consolidation with individual stocks and sectors doing well, while next year you're seeing a bit of a bounce back. Now, let me ask you about one of the most debatable sectors, which Rima, my colleague, tracks very, very closely, tech. You didn't mention that, so I'm asking you. You mentioned EMS and a couple of other sectors. What's the view on tech? Time to get in?
See, Nigel, first is that the rupee has depreciated, and for tech companies, this is certainly a kind of a tailwind. So from that perspective, tech becomes like a safe haven in terms of parking when the rupee falls. But as of now, the valuation for tech companies have come down massively. So I think they peaked sometime in 2024 end. From there to now, the tech index is down in terms of P ratios are down 50%. So there's a massive consolidation happening. Obviously, the AI is going to take away a lot of businesses for them, but they are also investing in new areas where we see that the businesses opportunity might come in. But from tech perspective, we are a little bit underweight and negative. However, there are certain pockets like digital opportunities, especially in the travel and tourism sectors, in advertisement, digital ad. I think from tech, if you look at overall, I think mid-cap tech companies, there are certain opportunities that we are looking at.
So would they be the outperformers like a Persistent, Coforge, or have the ER&D companies started looking attractive after the recent underperformance?
Yeah, certain. So we go stock by stock, and we think that certain companies which are into digital advertising, that is one of our top picks. We are also looking at some platform companies. We won't call it as exactly the tech companies, but the platform companies where Q-commerce related companies. We believe that there is a good opportunity for these sectors to do much better than where the overall index is heading. So I think there are pockets of good opportunities in the platform-based companies and tech, mid-cap tech companies especially.
Jitendra, always a pleasure talking to you. Thanks for stopping by, giving us your views. All the best in the new role, and we catch up soon as well.
Thank you much, Nigel. Thank you, everyone. Thank you.
Keep an eye out on the bottom of your screen. We have Minda Corp. Stock has seen already a big run in the last years. I think from around 200 rupees that it spent a lot of time in, has moved to around 550 rupees or thereabouts. But those numbers look pretty okay. Explains why Minda Corp has moved actually to the high point of the day. As we speak, a bit of a spike. A spike is what we're seeing. I think there was revenue growth. There was a little bit of margin expansion. The profit number as well looked quite good. So that one.